If I told you to pay off $50,000 of debt and then you could save $1,000 a month on your mortgage, would you do that? So I'm a loan officer. I help people do mortgages to buy houses, sometimes refinance. And this client comes to me and explains to me that they want to refinance their house. I said, okay, why don't you tell me what's going on? So she explains to me that she has a house that's worth about 1.5 million. I said, okay. She then goes on to explain to me that she owes about $1 million on the house. She's at about a 7.25% interest rate. I was like, okay, we can probably save you some money. Go ahead and do the application. So when I'm looking at the application, I now see she makes plenty of income. She also has a ton of savings, and this is important to what I'm about to say. So, but I'm looking at her credit score, and I can see her credit score is in the high 600s. So when you refinance $1 million and you're at the high 600s, you'll save some money, but you won't save that much money because the rates are higher. I also notice she's paying mortgage insurance. So I take a deeper look at her credit report, and I realize she has a whole bunch of revolving debt, and the balances on this debt are pretty close to the balances. Now, when I'm looking at that and I calculate it all up, it's about $50,000 of revolving debt. She can make the payment. She easily, comfortably makes the payment and the mortgage payment based on her income. I'm also looking at her assets, and I see in cash, she has about $350,000, a ton of money in cash. So I realize at this point in time that if she takes about $50,000 from her cash, pays off the $50,000 of debt, that score will go from the high 600s probably to the high 700s, and the rate will go down dramatically. So I call her up and I explain to her, hey, listen, if you take this money, you pay off these credit cards, you'll get a rate in the high 700s. You'll get a much lower rate. Also, you will drop the mortgage insurance and you'll save a little over $1,000 a month. If you don't do that, we could refinance you. We could drop the mortgage insurance, but you're only going to save an additional $100 or so. It's really not that much of a savings in the mortgage. The real savings is going to be in reducing the mortgage insurance. Would you be interested in paying off the debt to just maximize your savings? She thinks about it. She goes, no, I think I'm comfortable with the revolving debt and I want to keep the money in my savings account. I'm not that interested in taking $50,000 of the cash I have, even though I have $350, paying off this revolving debt, which is probably at interest rates anywhere between 8 and maybe 18%, and saving $1,000 a my month. I think I would like to keep the debt. I think I would like to keep the money in my savings account, and I'll go ahead and do the refinance. I'll eliminate the mortgage insurance and save a little bit on the actual mortgage, but I'm not interested in saving the full 1,000.